What is going on with strategy and STRC? Look at this! STRC has splattered against the pavement, falling as low as 82 bucks. Bitcoin took a baseball bat to the kneecaps as well, now sitting at 64,000, and it's not looking good. Sentiment is at arguably its worst point in history. So is this it? Is the FTX of this cycle Saylor and MicroStrategy? Is STRC going to unravel, bringing down strategy and Bitcoin with it? That's what the bears believe, and they're dancing in the streets right now. Well, we don't take kindly to people dancing in the streets while the building is on fire, and neither does GigaChat. He has responded in typical Saylor fashion. And he made some good points, like they run the headline about MicroStrategy losing $16 billion, but they forget to mention they were a $250 million company before they adopted the Bitcoin strategy and climbed as high as $80 billion at the peak. So, are the media and markets running an inside job in an attempt to force Saylor to sell his Bitcoin? Or are we par for the course? The 4-year cycle is right on schedule, and yeah, Kevin Warsh gave you the hawkish act, but we'll reveal why. That's just what it sounds like before doves cry. Stick with us to the finish. We're coming at it from both angles. What's the bull case here? Not just for Bitcoin, but for Saylor and strategy. I want you to think to yourself, what if 59K or a little lower is the new 3K or 16K? That's why Citibank is calling for 180K Bitcoin by the end of this year, because they see the same setup. What is the bear case? What could go wrong? How bad could it get? And also the one thing that can save Saylor, STRC, and MicroStrategy, and it could be just around the corner. Welcome back, I'm Rustin, and we got an insane show to get to. Oh yeah.
I just don't see how it could be a... By the way, how much Bitcoin has BlackRock sold in the past 3 months? Like, do you know for every Bitcoin we sold, other actors in the market have sold 1,000, right? 1,000x, actually 2,000x. So in the middle of a bear market, you know, Bitcoin crashed from 120,000 to 60,000, and we sold 32 Bitcoin, and the same time we bought about 250,000 Bitcoin. So in the middle of the bear market, you know, we have bought net 250,000 Bitcoin or something. In what way are we a systemic risk, right? Right? In fact, we're the ones that are keeping the market from crashing more. We're the biggest buyer of Bitcoin this year. So we're not a risk to the market. We're actually a shock absorber to the market. Our equity and our credit is keeping Bitcoin from crashing from 120,000 to 30,000, right? If we weren't here in the market, you would see... What do you think would happen if we basically sold 250,000 Bitcoin right now to the other investors? If we had actually dumped 250,000 Bitcoin, the people that dumped 75,000 Bitcoin out of BlackRock would have sold another 75,000. The market would be sitting at 20,000. And so, no, we're not a systemic risk. We're a systemic source of power and robustness. We're a supporting structure for the market right now. Our company is damping the volatility and creating the liquidity, holding the price, right? We spent $64 billion in 5 years. What if we hadn't spent $64 billion? If we hadn't spent the $64 billion, you think the people at the ETFs would have spent $100 billion?
All right, existential risk or systemic source of power and robustness. Let's get into it. And if you're new here, don't forget to click that subscribe button so I don't end up living in a box under the overpass. We appreciate your support, especially in the trenches, which is where we are, down in a hole. Before we go further down the spiral, let's get into the bearish case for strategy and Saylor. And don't worry, stay until the end, pay the like toll, and you'll get your happy ending. But the bearish case, it's been a rough month for strategy holders, down 32%, many jumping ship, and many still believe. Michael Saylor's Bitcoin-backed preferred stock STRC has plummeted to 85 bucks when as low as 82, its lowest level in history. It's being alleged on X that the company is expected to be forced to sell several million more Bitcoin in the coming days to avoid, quote, margin calls. Many speculate that maybe Saylor should have used Mythos instead of GPT. Okay, but in all seriousness, how bad could it get? First, let's look at the price, then a little bit on the legal front. Bear point 1, Stretch has broken. Allegedly, STRC, the iPhone moment for strategy, the product Saylor said he'd sell to his grandmother. It's at $80-something, par as 100. And here's kind of what the bears says everything. Saylor has raised the dividend on this thing 7 times trying to hold the peg. 7 raises! You know what it means when you have to keep raising the rate to keep people in? It means they're leaving, and every raise costs more to run the whole machine. Bear point 2, the market is calling this junk, not figuratively. Standard & Poor's officially rated strategy non-investment grade. But come on, we know Moody's, the people who work there, they can't even see. But forget the rating. The free market agrees independently. STRC's effective yield is trading near 13%. The ceiling for the highest risk junk bonds, 12.5. STRC is above the top of junk. Maybe that's just to entice. Bear point 3, the funding machine, they say, is broken. The model used to be clean. Issue MicroStrategy shares at a premium, buy Bitcoin per share goes up. Beautiful. Past tense. MNAV, the ratio of Strategy's market cap to its Bitcoin value, allegedly. Still don't know what the hell it means, but it has been below 1 since November. Every share Saylor issues now is worth less than the Bitcoin backing it. He's selling a dollar for 80 cents. And Bitcoin yield, the metric his own CEO called our true north, on an earnings call, went back down during their last raise. When called on it, Saylor said Bitcoin yield is a, quote, narrow KPI and shouldn't be the main measure. The same KPI he invented as true north. Goalpost appears to be moving, allegedly. Bear point 4, the maturity wall is coming. Strategy has $6.7 billion in convertible bonds due in the next 2 years. The debt just matures, and the options? Issue MicroStrategy shares, dilutive below MNAV 1. Issue STRC, broken allegedly. Or sell Bitcoin. The lower Bitcoin goes, the more he sells, the more pressure on the price, and you can see how this kind of works. Bear point 5, the never sell problem. Saylor said on video more than once, I promise not to sell Bitcoin. Direct quote, when the sell started, quote, I never said the company wouldn't sell its Bitcoin. And also direct quote, except when you've possibly been marketing STRC to retail investors as a near money market savings product while your funding mechanism may be broken. According to Matthew Crowder, securities attorneys have a specific term for that, class action suits allegedly being organized. Now, just to clarify, if you look at this, it's very difficult to prove this type of thing in court, and you see why in AA's post. The burden of proof and the malintent is very difficult. But let's proceed. Let's go to the other side. Before we do the bull case, I need to tell you about Peter Schiff. Not because he's right, because he's been wrong at every single price. 3,800 in 2018, quote, still expensive. 16,000 in 2022, going to 8,000. Bitcoin at 63,000 this month. It's going to 20K. The man has predicted Bitcoin's collapse more than 20 times. Probably 10x, 200. Never once correct. He just changes the number, rings the alarm a little louder, shows up to the next conference. The strategy bears are running the exact same playbook. When strategy was a $5 billion company, alarm. 20 billion? Alarm. 50 billion? Alarm. You see where this is going. Chef Shifty Pete, how'd that work out for you? All right, bull point 1, the entire death spiral thesis started because strategy sold 32 Bitcoin. 32 out of 845,000. 0.004%. The alarm bells were deafening. Then the same week, they bought back 1,550 Bitcoin. Bull point 2, the machine is raising 131 million every single trading day. Oh, and here's the number the bears keep ignoring. Strategy has raised $40.1 billion this year through the end of May. Again, in the worst Bitcoin market in recent memory. $131 million per trading day. Their annual dividend obligation, the one the bears call the death blow, is $1.7 billion. How many trading days to cover that at the current price? 13. The bears are staring at a $1.7 billion number and screaming, the machine is broken. The machine covers that number every 13 days. You cannot break a machine that runs faster when people panic. All right, bull point 3. Bears look at 11.5% and see cost, drag, leak. Those are real dollars. They're not wrong, but they're measuring cost without measuring what it's buying. Every dollar raised by STRC goes directly into Bitcoin, and they're paying 11.5% to borrow against an asset whose 200-week moving average has compounded well above 11.5% every year this decade. Saylor said it himself, the machine only needs Bitcoin to appreciate 1.25% annually to sustain the dividends. That doesn't sound like a leak. That sounds like a vacuum cleaner. All right, now here's the part that's going to make the bears develop stress rashes. If Strategy keeps buying Bitcoin at the exact pace they are right now, 1,800 Bitcoin per business day, Stretch stays flat, no growth, and Bitcoin doesn't even go on a crazy bull run. It just reverts to its own long-term power law trend by the end of 2027, and that trend line price, $275,000. No mania, no MNAV expansion, no heroics, just Bitcoin doing what it's done for 15 years. That gets MicroStrategy to approximately $1,000 a share, allegedly, and the bears are out here acting like the game is over at 63,000. They built their entire collapse thesis on a scenario where Bitcoin goes to 8,000 and stays there for like 7 years. Let me know how that trade works out. We'll be over here. All right, bull point 5, the institutional era is starting. While the bears were writing treatises on CEBE drag, Citi dropped their MicroStrategy price target from 485 to 325, but kept their buy rating, a lowered target with a maintained buy. Strategy needs Bitcoin at approximately 94,000, not 24, not 124, not an all-time high, just 94 for their Bitcoin NAV to reach a new all-time high, because they've been buying the entire dip. 200,000 Bitcoin stacked since the October top. That just does not sound like a company in distress, but more like a company on offense. So here's where we land. The bears have some real receipts. The legal risk, the maturity wall, that's all real. STRC below par is real. All of it's real. But the bulls have something the bears keep refusing to run through a calculator. The machine is raising $131 million every single trading day. In the worst Bitcoin market in years, they bought back 48 times what they sold. Their Bitcoin NAV only needs 94K to hit a new all-time high, and the power law, 15 years of trend data, points to $250,000 by the end of 2027. Without a bull market, just the trend. Is Saylor infallible? No. Is the structure perfect? No. But is this the death spiral the bears have been calling since this company was worth $5 billion? Ask Peter Schiff. He's been calling the crash since 3,800. How'd that work out? But here's what neither side is talking about. The one thing that makes the maturity wall disappear. The one thing that sends MNAV back above 1. The one thing that turns STRC's 11.5% yield into possibly the deal of the decade. And it might be just around the corner. And Shifty Pete knows about it. Before I go there, though, look at our likes!
I gotta pump those numbers up. Those are rookie numbers in this racket.
If you've been watching this whole video and you haven't smashed the like button yet, do it right now! Stop scrolling! Stop rewinding! We slaved over this for hours! The bear case, the bull case, the sources, the lawsuits, all of it. A like takes 1 second. Hit it! Go! I'll wait! In the meantime, a word from our sponsors powering this show over at the Bitcoin Way. Our friends at the Bitcoin Way do this for a living. Hardware wallet, your own node, full on-chain verification. They walk you through every step until you mastered it. Plus, privacy phones, Plan B residency, the whole sovereignty stack. Schedule your free 30-minute consultation today by scanning that QR on screen or click the link in the description. Do it today, not next week, today. And here's the dirty secret about every other Bitcoin-backed lender. They're lending your collateral out. They're rehypothecating it. They're playing the same fractional reserve game the banks play with your Bitcoin. And when the music stops, your stack is gone. Ledn doesn't do that. Their custodied loan product means your Bitcoin sits in cold storage. Never lent out, never touched. That's the Satoshi standard. 8 years, $10 billion in origination, 0 customer Bitcoin lost. Lowest rates in the industry, no hidden fees, no fine print, auto top up so you never get liquidated by a wick. 0 prepayment penalties, paid off whenever you want. Don't sell your Bitcoin to buy a house, a car, a business. Borrow against it. Keep your stack. Scan the QR or click the link in the description and head over to ledn.io.
Another thing I want to ask you about is the treasury yields that we're seeing right now and comparing that to the debt that the US is in, the national debt. I know it's a very complex question, but I'd love to get your thoughts on it, kind of explaining it to us. You know, people that are not too deep into economy, into economics would look at this and just we look at it, it just seems unsustainable for everyone that sees it. But then we see the treasury yields, they're high, you know, not great, but they not as high as one would expect, seeing how unsustainable that strategy is of constantly printing money and getting into deeper and deeper debt as a country. What's your position on not only just treasury yields, but the US economy as a whole?
Well, I think the economy is also a house of cards, and I think the Treasury basically operates a giant Ponzi. But I agree with you that 5% on a 30-year and 4.5% on a 10-year does not make sense given a $40 trillion national debt that is skyrocketing. If you look at the numbers that we got from May, the most recent numbers from the U.S. government, I think it was about a 34% increase in the debt, in the May debt year over year. So this is massive. The interest expense rose by 44%.
That's insane.
Based on May's interest payments, interest is now running at 1.6 trillion per year. Now, some of that interest is paid to the Fed and to, you know, Social Security trust funds. But even if you X all that out, it's still like a net interest of almost 1.3 trillion. But it's going to keep getting bigger and bigger every single month because more and more short-term debt matures and has to get rolled over. And you know, the current yield's in the low 4s. And ultimately, if we refinanced the whole debt, right, we have 40 trillion in debt. You know, I think it'll be 50 trillion by the end of Trump's term. And if we had to finance that at 4%, that's 2 trillion a year in interest payments. That's 40% of tax revenues. But I don't think interest rates are going to stay at 4%. I mean, what if they go to 8%, which is still, you know, not that high?
What happens then, Peter? What happens then if we get to those levels?
Well, I think we implode. But that's why I think the government will do everything that it can. I think the Fed will do everything it can to prevent that from happening. But they're not going to try to prevent it from happening by slashing government spending or raising taxes or doing something to shore up our finances. They're just going to create inflation. That's why I said that Walsh will choose inflation, just like his predecessors. Because if he doesn't choose inflation, he's choosing something politically that will be a lot worse, which is default, collapse, financial crisis. You know, I mean, that's why Hank Paulson, who was the Secretary of the Treasury under Bush, a month or two ago came out and said that we need to have a break the glass emergency plan to deal with a debt crisis.
You see, Shifty Pete is right about some things, just not Bitcoin, but in his critique of the fiat Ponzi, not too bad. Now I need you to understand something about what's about to happen to the financial system that even Shifty Pete does. And when I say about to, it's already in motion. The market right now is pricing in a 24% chance that rates go up by at least a half point by October. The consensus inflation is back at 4.2%, highest in 3 years, and Warsh has to hold tight or hike. That consensus is wrong, and when the markets realize it's wrong, Bitcoin pumps. MicroStrategy pumps. Every single bear thesis we just laid out evaporates. Here's why. Kevin Warsh just told Congress on the record that he doesn't like the CPI. He likes trimmed averages, underlying inflation. And quote, not what is the one-time change in prices because of a change in geopolitics or a change in beef. Translation, oil spikes, ignore it. Beef spikes, ignore it. One-time war-driven price shock, ignore it. He has pre-built the escape hatch. He can cut rates anytime he wants, and inflation, efficiently, will not stop him. Oil already cooperating, though we do have some interesting developments. The strait looks to be closed again, but prices were almost back to pre-Iran war levels. That's probably going to change very soon. But two inputs now telling the Fed that the coast is clear. One of them's getting a little hairier, though. Third input, BlackRock's private credit funds are limiting withdrawals. Pension funds drowning in private credit. The entire shadow banking system is underwater because rates stayed high too long. Too big to fail. Rate cuts fix it. They always find a way to fix it, allegedly. Fourth input, the one thing that is not optional, the United States government is paying roughly $1 trillion in net interest on the national debt. 1/3 of the entire national debt matures in under a year. It needs to be rolled over. Rates stay high, that bill explodes. They do not have a choice. The machine needs lower rates, and the machine always gets what it needs. So here's what happens when Warsh cuts. The dollar weakens, risk assets rally, Bitcoin, the hardest money on earth, catches flight. MicroStrategy, MNAV, back above 1. Capital raise machine, back on at full power. STRC at 11.5% yield becomes a very hot fixed income product. The maturity wall, refinanced at lower rates. The death spiral, never a death spiral, just a pause. Bears built their entire thesis on the assumption that the Fed stays tight forever. The Fed has never stayed tight forever, not once in 50 years. Strategy needs Bitcoin at 94K to hit a new Bitcoin NAV all-time high. They've been buying the entire dip, 200,000 Bitcoin accumulated since the October top. If the Fed cuts once, just once, and where we are in this cycle, you know where Bitcoin goes? This was never Saylor's problem to solve. He just had to wait. And he's been buying the whole time he waited. Death spiral or the most disciplined accumulation in financial history? What do you think? Oh, and check it out. If you guys watch this show, you know what we're about. It's about freedom of speech and moving Bitcoin adoption forward. Rumble Wallet makes it easy to support both. They just launched their new wallet. Setup is simple. Head over to wallet.rumble.com/simply and use code simply10 to get $10 back and stack some sats today. Stay humble, stack sats. Don't sell your generational wealth to institutions. Smash that like, hit subscribe, give us a pamp, and let us know what you think down below. I love you guys. Hope you have an amazing weekend. Catch you next time. Peace.
If you prefer to go down with the ship, you.